If you've never gotten a mortgage before, or maybe it's been a couple years since you got your last one, getting a second opinion, guys, is an absolute must in order to ensure that you're getting the very best rate with the most reasonable amount of fees. And guys, in this market that we're in right now, it may actually be more important than ever to do this. So with interest rates higher than normal, a lot of people are used to the 2s and the 3s, but with rates approaching the 7s, a lot of people right now are paying a lot of extra money in discount points to buy their interest rate down. But how do you know if you're actually paying too much? And guys, also furthermore, what's more important to you anyway at the end of the day, right? Is it a lower interest rate or is it less money out of your pocket, especially if you know that there's an opportunity to refinance your loan at some point down in the future when rates actually do come down? But that's the topic of our conversation today, guys, in our latest episode here called The Mortgage Maze. And the topic of our discussion today is called closing cost comparisons. And we're greeted again today with Mr. Stephen Knorr with Alcova Mortgage, and he's going to be bringing us some real life scenarios where he's helped a lot of his clients save hundreds and thousands of dollars by simply just comparing other lenders' closing cost worksheets compared to what he was able to offer them through Alcova Mortgage. But before we get there, if you're new to the channel, my name is Brian Taylor and I'm the owner of Dreamline Realty right here in Charlotte. And if you missed our last few episodes in our series, you can check them out right here on the channel. There's actually a playlist down below called The Mortgage Maze. Go ahead and check those videos out. But right now, I want to bring Stephen onto the channel here and talk about some of these scenarios. And guys, I think what he's going to share today is going to be super, super eye-opening and super impactful. So Stephen, let's get you in here and talk about what you've got to talk about today. Hey, Stephen, what's up?
Hey, Brian, how are you?
I'm doing good. How about you?
Man, I'm blessed. Glad to be back on the channel.
Yeah, that's awesome. So I'm excited to talk about what you've got to share today. You've got some scenarios. I know several people we've sent over your way who might have been talking to other lenders. I've seen this guys in live action, right? You've been able to kind of dissect the closing cost estimate and say, wait a minute, hold on, I can do a lot better than that. Or what they're charging you is just way ridiculous. And you explain that to them and it makes a lot of sense. So I'm excited to hear what you got to say and show the viewers exactly how you work your magic, so to speak.
Gotcha. Yeah, and just to kind of kick this off, right? Everything we talk about is a strategy. So one of the first things I talk to the client is I let them know they're the captain of the ship and their lender and their agent is there to help navigate through, the choppy waters, but it's their decision where to dock their boat, whether that's buy the house, lock in a rate, pay a fee. So the examples I give today are real life things that we see, but people are just conditioned to just ask, what's the rate? What's the lowest rate? Just because for the past 3 years, that's all that's mattered. With a rate comes a fee. So if you just call up the lender and say, I want your lowest rate, you're also accidentally asking for the highest fees because you cannot have one without the other. So there's lots of rate options. There's lots of fees associated with that. Lenders can disguise fees in lots of different creative ways. So it's mainly just getting an apples to apples comparison because we don't ever prevent anyone from shopping for a mortgage. That's their consumer right. The CFPB protects them. And it's important, but it's also important to understand who's got your back and who's going to be honest. A relationship-based lender like myself wants to make sure that you're taken care of, where a transactional company, most internets need you in and out the door to feed that monster. So I think it'll be good to see some of these real life examples. And most of these clients didn't know they were paying those fees or thought they were getting a great deal because of the rate. And it's just more to it than that. So I think you might have a few of those queued up to review. Is that right, Brian?
Yeah, let me queue them up here and I'll have you walk through them and let me know if you want to, let me know when you want me to advance a screen here. So let's take a look at some of this. So here's the first one.
Right. And this is a client that I personally worked with. Okay. I quoted this client a 5.25% rate with no fees. And they decided to shop. The first thing, and again, I'm not knocking any company, but the true name of this company that they got off the internet is called Lend a Loan LLC. To me, that just sounds a little fishy just from the start. Again, they might be a great company. I don't know anything about them, but they're clearly in the business to lend a loan and that's it. They're not going to care about you, right? Brian, take a guess at what the difference of a 5.25 payment and this 4.875 payment
You said 5.25?
is what I quoted this client. Yeah.
I don't know, 50, $60 probably?
It's actually less than that. It's $20 a month because this loan amount was only $108,700 and it's a 10-year amortization. So if you'll scroll down, you can see this client thought he was getting a deal. He told me he was paying no extra money for this lower rate, when in fact, keep scrolling, boom, right there. This lender was charging him 4.75% of the loan amount to the tune of $5,163 to save him $20 a month. And this client actually called me and was a little bit upset with me that I didn't offer him this deal. When I explained to him the break-even analysis on that $20 savings is 258 months, which is almost 3 times the loan, the term on the loan. And he got to hear me and understood that they weren't quite truthful. And yes, the rate was better, but this one-time closing cost was being paid for that rate. He jumped right back in my ship and we never looked back. So right here is a perfect example of somebody who called an online lender and asked for their best rate, and that's what they gave him. They just didn't tell him there was $5,000 in fees associated with that $20 in monthly savings.
Wow, that is crazy. The break even on that is insane. Holy cow. Okay, wow, that is nuts.
And as a local lender, I tell people honestly, because I believe this, if it's something I would never do or tell my mother, sister, brother, or father to do, I would never recommend it to a client. And this is something that I would never recommend to anybody, even if they were trying to tell me they wanted to do it. So thankfully, we were able to get this client back in our hopper and get him closed.
Wow, that's awesome. Let's go down and see the next one you got here for us.
The next one is important to see the name up top, Rocket Mortgage. Rocket Mortgage is a company everybody knows. I like to present them as a marketing company that also does loans. Now you'll notice the rate on this one is 3.375. So this was back in the heyday. It's a larger loan amount. But if you'll scroll down, you'll see that this client was about to be charged. It's a little bit blurry, Brian, but it's almost $40,000 in fees. It's 5.875% of that loan amount. This wasn't a client of mine. This was shared in a mortgage forum that I'm a part of. But ouch, right there. Yeah, that's a huge ouch. I don't know all the break-even numbers on this one, but I guarantee you, if you're spending $40,000 just to secure a rate, even though that rate's really good, and this scenario might have made sense for this client at that time, I wonder if they're aware that they have the option to not pay that for just a slightly higher rate.
Yeah, that's incredible. 5.875 in points. Dang.
Some states that's not even allowed. So, some of these are state by state basis. So yeah, you got to be careful.
What about this one?
So this one is an example where lenders can get creative in what they call their fees. So like this client thought he was getting charged 2 points. Now in today's market, 2 points, it seems like a lot, but sometimes just the way the client is, if they have a really low credit score and aren't putting a lot of money down, sometimes you may have to pay 2 points. Again, it's all on a case-by-case basis and each client's a little bit different. So I got to be careful of saying, what's a good idea versus a bad idea when we don't know the big scenario. But this client thought he was paying 2 points. But if you look at it, they also tagged in a loan origination fee, which is equal to a full another percent. So this client was in fact getting charged 3% or $18,000 when they thought they were only spending 2% to buy their rate down. Most loan origination fees or lender fees, like ours at Alcoba, is $13.95. Most people that are who we are, local lenders, that's about the charge. You might find some $1,200 or some $1,500s, but if somebody's charging you a full percent of your loan amount, that's profitability going back to that company to get whatever rate they're quoting you.
Yeah, wow, that's amazing. And do you have one more here for us?
I think there was one more.
Yeah, right here.
Right. So again, this client, the points are a little bit excessive. Probably, but again, it's a case by case basis. But processing and underwriting fees, commitment fees, lenders can get very creative where they're like, no, we're not charging you any lender fees. Well, they start nickel and diming you these other fees that they control with different names. And again, this client is assuming they're paying $4,300 for their rate, but they're also paying the additional processing and underwriting that adds up to a tune of $5,500. So the big thing on this is buyer beware, right? Like, we don't know what the intention of internet companies are, but they have to close loans at any cost. And local lenders like myself and other people who care about the community and the client, we are going to be super transparent because we don't spend millions of dollars on Super Bowl ads. We have to take care of people. So in each situation we just looked at, it may have made sense for that client, but you have to have a trusted advisor, right? We are not financing a pair of shoes. This is the biggest financial transaction you as a person or a family are going to make. And you have to really take ownership of that, and not only, shop, but compare apples to apples and get somebody that's going to help you through this very, very important process, especially when rates are up and down and fees are high and low, and there's just so much coming at you. Somebody like myself that's been in this for 17 years, I look at it and say, man, this is tough. So somebody that just started last month, best of luck to them, but they're not the guy that's probably going to be the expert that you need as a home buyer right now.
Yeah, that's awesome stuff, Stephen. I think a lot of people probably got a lot of value out of that. And hey, guys, if you did get some value out of that, give the video a like, and don't forget to subscribe to the channel, and then tap on that bell for notifications. So I don't want you guys to miss out on any videos that we're putting out every single week on the channel. And guys, if you guys have had a similar scenario in your loan, in your loan journey, I would love to hear what you guys have experienced out there. So drop in the comments below, whatever you guys have experienced with online lenders or local lenders, or whatever your situation is. I would love to hear kind of your experiences. And guys, if you need my help in your home search, I'm super easy to get a hold of. Just call me, text me, email me. Scan that QR code on the screen, or go to that website at smoothmovecall.com. That'll take you right to my calendar, and the best way for us to get together is to hop on a Zoom call, spend 15 minutes, 30 minutes, get to know your situation and your time frame, and put a good game plan together. And Stephen, the same thing goes for you, right, with your information?
Absolutely. That QR code will take you to my calendar. If you prefer a text, that number right there receives text and phone calls. But no fee for any of this. A lot of people will ask, what do you charge? Nothing. We get paid if and when the loan closes, but we're just a local advisor. So people have questions, we have answers, and we want to connect.
Yeah, that's awesome. And if someone wants to have you compare their loan scenario, I mean, it takes you, maybe 15 minutes to do that?
Exactly. And again, no cost for that. And the worst thing I'm going to tell you is, hey, that's a good deal and you're going to sleep good at night. But more times than not, I'm saying, hey, get over to my queue right now because I can save you thousands, or advise you on how to use your money. I always joke, I water my money tree out back every day and night, but it just doesn't grow. So unless somebody has the secret money tree out back, you got what you got. And we got to make sure we leverage it to make sure that your down payment and your payment fit your goals when you're buying a house.
Yeah, exactly. Well, hey guys, I hope you liked this video. Thank you so much for tuning in today. I'm going to put another video on the screen here in just a moment. You may want to check that one out. But guys, if you haven't subscribed, again, hit the subscribe button and then tap on that bell for notifications. And stay tuned for our video next week. We can't wait to meet you right back here. And until then, guys, thanks for watching. And as always, make it a great day.